Good morning, everybody. We're now joined by Tony Greer of TG Macro. Tony's been joining us recently, discussing the equity markets, giving us his great views. He puts out a morning letter where he kind of goes over his views, thoughts, a lot of great macro thoughts on the markets, talking about sectors, individual names. So he's got a lot of great information. Thanks for joining us, Tony. How's it going?
Hey man, it's going good, Mike. Thanks for having me.
Yeah, it's another interesting day. We've seen the Nasdaq's all over the place just in the past like 15 minutes since we've opened. Nasdaq traded down in the futures to 74.87 low, and we're about 40 points off that low right now. Yesterday was Nasdaq weakness. What are you thinking here?
Social media is at the center of the tech storm right now. As I look at the social media ETF, SOCL, I get exceedingly bearish. I'm sitting here short. That ETF just provided a really nice retracement back up to moving average resistance, where literally the 50, 100, and 200-day moving averages are congregating. It failed at 34 for the second time on a rally, and that makes me exceedingly bearish. I'm literally sitting here waiting for my add to that short to kick in, which I will do below the low of 31.41 in the social media ETF. The way I see it, most importantly for the social media ETF, a quarter of that ETF is Twitter and Facebook, right? Obviously, the bigger one in this particular ETF is Twitter. And that is having some serious problems yesterday after Jack Dorsey was sort of dodging the shadow banning questions in front of Congress. So that's something to consider. Similarly, there was a Facebook representative in front of Congress, and the stock is on its fifth consecutive day down, carving its fifth consecutive new low for the, no, actually, I should say third lowest low that we've seen since July. And I think that it's a high probability that Facebook is going to migrate to the bottom of this 150, 190 sort of post-Cambridge Analytica range that it's trading in. I think that we're going to retest this March 26th low in Facebook. And that's why I think there'll be a really good bang for the buck if you're short this social media ETF on a breakdown. If Twitter breaks down below the 200-day moving average and you have Facebook migrating to the bottom of that range, I think social media comes off really hard. And that's sort of the center of the tech storm right now. And then you got Google, who no-showed to the meeting, which was kind of ballsy and kind of interesting. But that stock has obviously slid from its highs. It's slid back below. For me, what's most important is that it slid back below the March in it was around 1200 in Google. So Google broke up above that price in July, and it sort of consolidated around 1250. And now that we're back below 1200, I can look at that as a blow off top and try to short Google and put my stops up above that level or back in that range. So I'm kind of going on here, but the way I see it, social media and Google, weighing on tech right now, it takes a little bit of the light shining off of the emerging market issue. But what it does to me is it provides another, risky issue in the market. So that sort of lends a very risky view to the S&P from here. I feel like, lastly, that it has to catch up with what's going on in Europe. As you can see, the European markets have come off, led by the banks, driven by the emerging market situation. And now that I think we've got, the leader of the pack in tech backing off, it makes sense that the S&P might trade back to the, 2850 range or something like that. But that's what I have in mind. Nothing crazy.
Yeah, well, it's a lot of interesting points you bring up there. How we've been pointing out for a little while, FANG, without Apple and Amazon, has really, doesn't look that great. Apple and Amazon have performed tremendously. The other three names, not as much. And then, what you also point out at the end there is DAX and the rest of the world versus the S&P. I just looked today. Before today, DAX was down 6.5% for the year. S&P was up close to 8%. Shanghai Composite down about 20%. So some dramatic dislocations there between, the way that the world is performing and the U.S. is performing.
You know why, Mike? Yeah, you know why I think that is? I think that's because we're winning the trade wars 100-0. This divergence is really only going on here because of what's coming out of the White House. That's exactly what toppled the emerging market currencies, and that is exactly what's causing the divergence in the stock markets right now. China's the classic example. I've been pointing to that the whole way down in emerging markets. That as soon as President Trump started the trade conversation, the China tech ETF turned from the year's highs and absolutely dumped. So, to me, that was the clear, Trump putting China in the hurt bracket in the trade wars. Then he turned around and did it to Turkey. And this is sort of the same story, but you're never going to get the coherent story from the media because they're busy chasing around some anonymous sleeper cell that's their hero of the day for writing some kind of an anonymous op-ed in the newspaper. So we're going to try to stay on the market story here because this is what's going on. I think another major factor in the technology breaking down is sort of Tesla, finally giving way and trading back down to 280. It's bouncing a little bit now, but that stock only trades straight down or straight up. But it's really interesting. Finally, Tesla finally giving way. We've seen their bonds get cracked because nobody thinks they're going to make their next payment. And somehow the stock is miraculously hanging in there. So finally got Tesla backing off. We've got Netflix backing off. So the whole technology, sector is taking a little bit of a pullback, and everybody's curious to know, is this really the top or is this just a pullback? And I have to say that given, the government is sort of, not shyly getting involved. We're paying close attention here. And Senator Mark Warner said yesterday, Congress is going to have to take action here. The era of Wild West and social media is coming to an end. And I think that's highly significant because that's a brand new factor to this whole trading game, which has very much become a game of, okay, let's look at FANG. If FANG is going up and to the right, then we can just buy the entire S&P. So if that factor starts to fade, which I feel like it does now with FANG, a couple of the FANG members getting into trouble, then we probably see a consolidation in the S&P again. I felt like the whole entire rally through that last high of 2,900 was a little bit of a fear of missing out rally because the breadth was so narrow. So, it makes sense for me, totally, broadly speaking, for the market to pull back a bit.
Yeah. And now, what about also, you've mentioned a few times with us and in your note about truckers. You've liked that sector. Any change on that? We haven't really spoken about it in about a month or so. Any change based on anything going on with China or anything economic? Or you still like that sector? You think there's some...
I do like the sector, Mike. It's still a play on the rapid expansion of freight in the United States. One of my picks, Landstar, LSTR, is finally getting up and going up through the highs now, so that's making me happy because I'm also long JB Hunt and Werner, and they are kind of just floundering and doing nothing. But what's interesting in the trucking space is that everybody's got their eye on Amazon, and if you saw in the news today, Amazon I have to get the actual number down, but they're hiring a fleet. They're buying a fleet of Mercedes trucks that they're going to sort of employ as it's 20,000 Mercedes vans that they're going to employ for their delivery program. So that is sort of that's beginning to answer the question: how is Amazon going to solve their freight issue with the huge demand and limited supply? So I'm watching the truckers to see how they react with this headline on the tape. And like I said, I'm happy to see Landstar rallying. The other two not doing much, but I think that the tightness in the industry is going to continue to have one of the big major companies that are looking to get a leg up on the next day delivery. I think they're going to have to buy a trucking company or buy a portion of them. So I'm still on the lookout for that type of headline.
Yeah, so tell me the story on LSTR. I just pulled up the chart. It's been a great 3-day mover, especially given the equity pullback, or when I say pullback, S&P is off a few handles over the past few days, but still definitely outperforming. What's the story there?
They just caught an upgrade from Wells Fargo. I don't think that there was a specific sort of logistic headline that came out that juiced it, but they did catch an upgrade from Wells Fargo. I think it was only a week or two ago, or maybe it was 2 weeks ago, and really spoke to the same things that I'm talking about. The channel checks are providing, them with all the answers that this truckload rate environment is super tight. But it seems like they called Landstar a little bit less susceptible to sort of a pullback from here. So that I think is sort of what put Landstar out ahead of the pack in the last 2 weeks. And as we said, it finally culminated in breakthrough of those highs.
It's a
So,
beautiful technical move there, breaking through the highs and having a 3-day continuation like that. That's
yeah, exactly. So what you've got right now is any of the weak shorts that are in it are going to be forced to cover, and we'll see if anybody, in the major, any of the funds decide to, place a large allocation in Landstar or add to their allocation, and that might keep it up in this new range here above 120. So that sector's still looking good to me. You got to be in the right names, and that's why I usually try to pick a couple when I'm really not sure if it's a name specific story, and sort of sprinkle your chips around with smaller bets and see which ones pay off.
absolutely. And then I'm just pulling up the Nike stock as you were talking about it earlier in the week. It looks like, we're trading about $80 right now. Which is pretty much where it was when we were speaking last. The news continues, and there's spin from both sides. But we'll definitely see how that one continues to play out.
Yeah, Nike's interesting. I might get run over on my call here if everybody in the world decides that they want to run around in Colin Kaepernick gear and be inspired to protest against the police. I'm betting that that's not going to be the case. I've already seen the new video, Nike's new "Just Do It" video that's out. And while the athletes that they feature are totally inspiring, I still get that kind of disgusted feeling when they cut to Colin Kaepernick in a trench coat, and he turns around and gives his spiel. So the reality is that it may not affect and derail Nike as the sportswear behemoth that it is, but I think it's sort of it puts them on one side of the line for a certain portion of the American consumer. A certain portion of the American consumer is just not going to be happy with disrespect to the flag and that type of thing, and they're going to choose not to buy any gear associated with Colin Kaepernick. If that shows up in the quarterly numbers in the next couple of weeks to months, then maybe Nike will have a pullback. But as of now, it's staying above the 50-day moving average, and I may get stopped out if it trades back up above 82 or 83, and we'll call it a losing trade, but it won't be the first one I've been involved in.
Sure, always. But yeah, a lot of great opportunities you're pointing out here. I have the charts up of SOCL and also LSTR, and it just shows, how different both of those two charts look. And, it goes to show you in any sort of market environment, you can always pick out some good winning sectors and some underperforming sectors. And so that's very interesting. And, you've been on both of those. So that's great work there.
Thank you. We've got a
But
couple going okay.
yeah, exactly. All right. Well, thanks a lot for the update, Tony. I really appreciate the color on the markets, and keep us updated on what you're thinking here.
I sure will, Mike. Thanks for the call.
All right. Talk to you later. That's Tony Greer.